Last week was fairly strong for the S&P 500 overall. However, there were some notable stocks that were down, like Alphabet more than 4%, one that we did in fact cover last week. But today we want to focus on the other, which is Amazon, down around 3%, and we do believe this is a very good stock to consider for the portfolio, one of the best in the AMZN right now as well. And we also notice something that Wall Street agree on with their strong buy. Seeking Alpha also give this a buy, and although we see Quant giving this a hold, 3.49 is not far off the 3.5 to flip this to a buy. So we're going to understand how this company has performed, why we like it, and how much undervalued it is, and our buy price. First thing to note, how did they perform in their more recent earnings from just a few weeks ago? And as we can see, the headline reads, they popped on the earnings beat as well as some notable cloud growth. No surprises then, they reported better than expected both on the EPS as well as the revenue, and when we get down to the numbers, they are looking very, very impressive. EPS 143, that is a massive beat from the 114 that the market was expecting, and the revenue, as we can see, more than 1 billion higher, 158.9 above the 157.2 the market were anticipating. And with this company, Wall Street also go into a bit more detail into a few different metrics. The first one is their AWS, which as we can see did come in marginally under 27.4, lower than the 27.5, and we can see the advertising coming pretty much straight in line, 14.3. Again, analysts were expecting the same. Now, in comparison to the previous quarter, well, their top line was up 19%. We also noticed in comparison to the same quarter last year, another double-digit increase at 12%. But one thing that we need to understand with Amazon, they are investing heavily. A lot of capex is being spent to invest, as we can see here, data centers as well as equipments like NVIDIA GPUs, something that we have heard a lot, not just from Amazon, but Meta platforms as well as others. Capital expenditure is really ramping up. In fact, when we look at the actual number, it is up 81% on a year-on-year basis, from 12.48 billion to right now they're spending 22.62 billion. We also heard from the CEO Andy Jassy as well, saying that the company plans to spend around 75 billion on capex in 2024, and he doesn't go on to stop there. He said that he believes the company will continue to spend a lot more into 2025, and all of this is being driven by generative AI. They believe this is the future, and ultimately they don't want to be left behind. Now, in his own words, he says that it is a really unusually large, maybe once in a lifetime type of opportunity, and he also said shareholders will feel good about this long term and that they are aggressively pursuing it. So don't believe this capex to stop anytime soon. And on the side note, you could argue this is also very, very bullish for NVIDIA as well. Companies, AMZN as well as others, are really ramping up their capex spending. Now, we also note for the current quarter, they are anticipating around 181.5 to 188.5 billion, and that would represent 7 to 11% on a year-on-year basis. However, one thing that we do note, in comparison to what the market are anticipating, it is lower. They were looking for around 186.2. We also notice operating income, something that maybe isn't talked about a lot, is up around 56% on a year-on-year basis. So we do believe there are a lot of strong points about this company that we do anticipate will help when considering whether or not this is one you should consider for the portfolio. And we can see maybe one thing that isn't discussed as much, but a lot of cost cutting is being performed by the CEO. It says more than 27,000 jobs since the beginning of 2022 have been effectively cut, and the restructuring is still going on. This isn't something we have heard the last of. Now let's go back to this company. Over the last year, up more than 34%. Over the last 10 years, no surprises, you would have massively outperformed the S&P, up more than 1,070%. Now we do notice it is towards the upper end of the 52-week range, but has a pullback from the all-time highs we saw of $216, a near enough 10% pullback. And as we said, buy ratings pretty much across the board. In terms of forward PE, 38.6. We'll touch upon that shortly as well. And it is looking good in terms of their metrics. Now, we also want to show you a few graphical bases of how they performed in that latest quarter, just so you can understand not the size of this company, but also the growth for in fact the large size. In terms of their net sales on a trailing 12-month basis, it continues to go up. Already mentioned 12% on a year-on-year. This is something that we do want to see, but maybe something we also take for granted. With a lot of growth being seen right across the board, this is something that we believe won't stop, but we do need to have considerations for both bearish and bullish indicators. In terms of operating income, we already spoke about the large growth it's seen, around 56% from the previous quarter. We've already spoken about the large growth from the earnings report, but on a year-on-year comparison, up triple digits, up 130%. Remember, yes, this company does trade at a very high valuation, but you need to question whether or not you believe it has the supporting metrics to uphold that price. In terms of the bottom line as well, we do notice that is also up triple digits, 148% on a year-on-year perspective. And one thing we always like to focus on is the free cash flow. It does ultimately make up some of the valuation when we come to our own intrinsic value as well as our margin of safety. That is also a little bit inconsistent, but nonetheless up triple digits, 123% on a year-on-year basis. Now, in terms of growth, moving forwards, Amazon also anticipate double-digit increases every quarter to the earnings per share, and we also notice they have massively outperformed when we look back from the last 4 quarters. That is a 100% track record.